Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And some good stuff in the middle. Well, this has been a better week for stocks. We saw the stock market sloppy through the first part of the week, but then get some legs later on in the week. Thursday, Friday, the market started to move up, got through some minor resistance area as we expected to happen. We talked about that last week in our short-term view. So we got pushed up through that resistance area, and then the market really started to quiet down here on Friday. Oil helped later on in the week, as again, there were a few times during the week where upside reversals lifted stocks. I'll show you that in a moment on our E-mini S&P chart. Gold, well, that tested the upside area that we were looking for and then began to pull back. Silver, much worse, a much bigger decline, and setting up what looks like a corrective period in those precious metals. Copper, some real crazy action in there, spiking up and then pulling back, and that looks like it's also met some point where it's going to get some pullback. The dollar has affected those markets because the dollar got very strong. The issue is the European markets, a lot of weakness there, a lot of weakness economically. We expect the dollar to be in a rising period here for some month or longer and see a lot of chop back and forth in there that is probably going to help with these corrective periods in the precious metal markets. The euro, we're having really a pretty good sized pullback and bad patterns in there in the euro and in the British pound. Bond market, wide chop in there. We had a little positive pattern that we were looking at, made a nice little trade, and then it started to pull back. We think there might be one little more pop in there. We'll look at that in our short-term view of the coming week at the end of the show. But then we think there's a corrective period in the bond market also in here as interest rates have gotten crazy low with all of this talk of negative interest rate policy, NERP. So let's take a look here at our 60-minute chart as we look what influenced the markets. This chart, of course, is a chart that shows both the overnight trading and the trading during the day, the gray area being the overnight trading, the white area being during the day. You can see here on Monday the market continued up after this rising period here overnight. That is all based on the fact that the IEA cut shale production outlook, and there was a lower rig data on Friday, so that was pushing oil up. Eurozone up 1.6%, China 2.3%. All those getting benefit from stronger oil. Oil, energies, materials all led the rallies on the upside. In fact, iron ore even stronger, moving up over $50. More economic weak data really talks about more stimulus, but the dollar gets a surge as the pound cracks on these Brexit fears. There's really not going to be any kind of a vote on this for quite a while, but it sure is in the news. And the euro, gold, both sharply lower on Monday as Brexit fears weigh on the pound and euro. Brexit meaning the British exit from the European Union. Comes Tuesday, world markets were modestly lower. BHP reports its first loss in 16 years, cuts its dividend. That weighed on the markets. Still looking at the Brexit affecting the pound and the euro. And Iran comes out and says the Saudi-Russian oil freeze, ridiculous to think that they're going to be part of that. Oil reverses down again, and the U.S. stock market drops right over there. On Wednesday, the Eurozone markets, they're sharply lower, down about 2% or more about Brexit fears, and the pound makes a 7-year low. It absolutely has gotten creamed. The euro drops in the contagion because they're afraid that, if that happens and Britain leaves the Eurozone, then that's going to really weaken that whole deal they have there. Oil cracks on Saudi comments overnight. and then reverses up after the inventories number right in here. You can see that oil reversal, how it helped stocks, and stocks started to get a big reversal there on Wednesday. So that was quite a big move. Gold surged over 1250 again, as we were expecting, and Fed Lacker comes out and makes a case for higher rates, and new home sales, well, they were weaker, a lot weaker. On Thursday, world markets were mixed, and it was kind of unusual action as China plunged 6.4%, down 23% year to date. But the Eurozone was up 2% in there. So you could see that was kind of mixed action, widely mixed action. Oil was weaker again. You could see right in here it was weaker, but then it started to move up. What was interesting is that the U.S. stocks, while China was down big and oil was down, it was testing supports. It wouldn't fall. The U.S. market would not fall. We kind of saw that, and we put some longs on, and man, this big rally came right there. It follows through on Friday, but then gets weaker right over here as oil peaks right over there. Gets up near the $35 area as we expected, and then starts to move down. And you could see the selling starting to come in here in the stock market as we do this recording just after midday. So the Eurozone was stronger. Asia was up small. U.S. stocks gained on oil, but then started to really falter. Consumer spending was strong. The core CPI up 0.1, up 0.3. The headline number up 0.1. Year over year up a 1.3%, and that is faster than they had expected. And we have the GDP comes out revised up for Q4 to up 1%. They had estimated that at only up 0.4%. And Fed Mester comes out. There's been a lot of Fed talking here, talking about they are still on track for higher rates. I think they're full of crap. How do you like that? I'd be shocked to see one more rate increase in the interest rate market this entire year. How's that? With China falling apart and with the Eurozone really in horrible shape, and this whole negative interest rate policy structure, you think that we're going to get big upticks in rates here in the United States this year? Very, very unlikely. Let's take a look at our economic calendar for the coming week, and we'll be able to see here that, well, the earnings reports, they are really slowing down here as we're coming out of that season. Big ones that I trade during the week, ANF is one that I tend to trade, and it's one that I have tended to be positive on in the stock. Costco is after the close on Wednesday, ANF before the opening on Wednesday. Joy Manufacturing Thursday, pre-opening also. So that's really it. You can see that's not a lot of earnings reports coming out. In the events, economic events that are coming out for the week, there is not a lot coming out that's going to move the markets. ADP on Wednesday, the private sector employment report, that is usually a little precursor to the bigger event, which is here on Friday, the employment situation there. And interestingly, these rig counts have mattered here on Friday and tend to move markets or oil or energy stocks, that whole sector. So worthy of noting when that comes out. So Friday will be the time that most of the economic information data comes out that can move the markets. That's it for the opening segment. We'll be back with the best and the worst of the week. For the best of the week, well, lots of good things out there to talk about. Energy stocks, mining, materials, lots of them had big gains, 5 to 10% during the week. We're going to look at the charts that have really the biggest gains of the week and some news. Sun Edison, I don't even know why I still have this on my list. I mean, it's back up to like 240. This stock has been totally annihilated, and we'll remove it from the list soon. But I saw this big move, so I thought I would would mention. 65% gain on the week. Their merger with Vivant is what's pumping this stock up. This company still has lots of issues out there. But let's take a look at some of these bigger gainers for the week. First one we're going to look at is Caesars Entertainment. That's CZR. And you can see in here we have our typical cyclical charts in here. When you don't see all the colored phasing in there, you know it's not one of the stocks we trade on somewhat of a regular basis, but still you could see beautiful cyclical rhythms right in here, a basing cycle and then moving up. When you get a basing cycle, this bottomed at 330 and then came down here to 5.5. The odds are pretty good that it's going to get above this level right over here, that last high. So that's up around 1070. It's now trading at 931. No real news to speak of today. Earlier in the week, they reported on 223, and those earnings were a bigger loss. And you could see here the stock opens way down over here at 6 something and gets pumped way up over here to 934. I mean, craziness. Don't be surprised if this one turns into a pullback in here, and then a buying opportunity is getting into some resistance area there between the upper 9s and upper 10s. So that might be the place where it decides to pull back. JCPenney, have to talk about that one. Again, I always like to say this is a stock I love to hate. However, I got out of the way on the bearish side because it was in a positive pattern. You can see these two spikes in here pointing to the low period we expected, and then it got into this big rally over here. They beat for pretty nicely for Q4. That's probably going to be their only profit for the whole year. I am not a believer in here, and their cash burn has been absolutely huge, and I think it's going to come back. So I still think this stock is going to $2. Yep, $2 from $9.50. But like I said, we got out of the way of this one. Also, in just kind of a favorable mention, one I don't trade that much, but up big was Domino's Pizza, DPZ. They beat on earnings, and their outlook was pretty strong. And that moves up sharply to an all-time high. Dillard's Department Store, DDS, up 17% on the week. They missed on earnings and sales, but they came out with a buyback and a dividend, and that lifted the stock. Let's take a look at the DDS pattern in here, and you will see here on this weekly chart, this is another great example of how these cyclical patterns, that is the rhythms in the market, suggested a bottoming and that there would be a rally in there. And it's just so sweet when they work this way. And so this was the low period we expected. This is the rally period we expected, and it gets this big rally. Now you can see in here that it gets right up to this, just above that 34-week moving average. That tends to be some resistance. You can see also that that kind of lines up with those bottoms right there. So that might be a place where it stalls. Next resistance zone is this 92.5 to 95.5 area right there that we have on our charts. And you can see in here on the daily as this thing just flies through the 34-week moving average. Note the momentum change using the slim ribbons in here, as this is where the momentum got negative here at about 87. It goes all the way down to 60. The momentum goes neutral over here, and then positive, and went neutral for a bar there, and then positive again. So a lot of bullish signs going in there on the short term, and the momentum indicators looking really nicely. We've mentioned Marathon Oil lately, MRO, and MPC. That's the refiner, Marathon Refiner. And here you can see this stock has come down from like 42 all the way down to $6.50. This is the worst of all the major integrated oil companies, and has, with this massive loss. See this little uptick right over there? This is where we were expecting the low to occur, and it gets that upward turn, this stock to me looks like it could give you some major gains. We're going to look for opportunities to buy this stock. If you look at our momentum indicator, it is still negative. It turned negative over here around 17 and a fraction, falls all the way down to 6. So it's still negative, but we're going to be looking for momentum to turn positive in there, and that one could give us some big gains later on, especially with oil getting better. Let's take a look at Tesla, TSLA, and oh man, I've got stuff popping all over the place in here. Sorry about that. Let me just get off of this MRO chart into TSLA. There we go. What's the matter with that stuff, team? All right, here we go, and you will see that this Tesla got down to an area that we expected it to gain some support and begin to move up. That's right in here. It had a kind of a hammer bottom and then started to move up. Now, this area right over here is a Fibonacci resistance zone. It gets right to the top of it. That comes right across with this spot right over here. This is a key spot, and we think there's going to be a pullback in here of some significance. Tesla up 15% on the week. They avoided losing their Indiana licenses. That's not a reason for this kind of a pop. This stock has got problems, if you ask me. This is the daily chart, and you can see in here the patterns as we have them drawn out and projected. So we're expecting this to be a peak right over here and then get a pullback right in here to some support area. So if you want to just look at halfway, 141 to 191 approximately, 50-point bounce in there, so we expect it to give up about half of that. And that would get you down to somewhere right around that low in the area of, let's say, 165, 167. We think there's a pretty big downside move coming in here for the short term. Then it'll probably try the upside again, but their Model X is just too expensive and not selling well at all. And we think that there's going to be a lot of downgrades still in this stock in Tesla. So, other favorable mentions on the upside: KB Home, Toll up 15% and 10%. Those are early in those upside moves. We like them. They both up to resistance though, so we're going to wait for pullbacks in there. The low interest rate environment we're in is going to help these stocks through spring. This is their season. So we think that the bids are going to keep coming back in the home builders, so KBH and Toll at resistance. Phillips up 18%. That was a timely move on the upside in there too. That's up to resistance. Long term, a very negative pattern in Pandora. I'm sorry, that's letter P. Tesoro up 18%. We commented about this group of refiners recently, saying that we thought investors were wrong, and that once we got past some of these inventory issues, that margins were going to start to get better and they're going to start to buy them. Well, 15% to 18% Tesoro on the week. We do want to buy that group in pullbacks. The last one to comment on is CSIQ, Canadian Solar. They have a 3 billion yen project, Japan bond that they have floated there. We say not yet to that. We're going to look for another dip into May, and then we like that. It's our favorite solar stock. That is the best of the week, and we'll be right back with the worst. For the worst of the week, similarly to what we had last week, there's not a whole lot to talk about. Very few big moves, big losses to the downside this week. The worst one actually came on Friday in Gold Corp, GG. Timed well by us because we talked about this during the week, that these gold stocks were setting up for some pullback. So take a look at this pattern in GG. In this case, analyst downgrades in this one, and make sure you go look at our gold market big picture video. I think you'll find it valuable. Look at the big gap right in here, a 10% decline in Gold Corp, and I did get some emails today from people that say they did well on this one, so happy to hear that. We'll be looking for a pullback in here further. Support comes down to just under the 13 number in there. That wouldn't surprise me at all. in GG. Take a look at Chipotle CMG, only down about 3.5% on the week, as this stock got into a good bounce. Now take a look at the cyclical rhythms in here. And for those of you that are new to our cycle charts, when we have these dotted lines in here, we're looking at a new cycle that is forming in here that we're picking up, and both of them bottomed right in here, and then you got this rally. Now this stock still has issues, more negative analysts comments coming out. Maybe their recovery off of their E. coli mess is going to take a longer period of time. Note here on the daily that it got up to this close to the 89-day moving average and started to roll over. So we're going to look in here for some chop. We don't think better than about 530 right over here. Notice the upward momentum, that green arrow right there. So we think that this area where it broke out is probably the support when we look at that. So that comes in right around, we'll call it 485, 535. That's probably the 50-point range that we think Chipotle is going to hang out in. Only about 4% down on the week, but pretty bad. Take a look here at Micron MU. So this is the daily chart in here. So this stock has gotten absolutely hammered. Now this pattern in here, you can see, is kind of a rectangle going on right like that. And when you get that, usually you continue to get some momentum in the same direction that it came in. We're going to look for one more little move to the downside in here. But when we look at Micron here on the daily chart, we have a bottoming due sometime around mid-March. We think this stock is going to be a buy under the $10 number sometime in the mid-March area, down 4% on the week also. Kellogg K is the next one we're going to look at. This is interesting in here, this pattern, because the stock has done really well, and you can see this one has our colored phasing. Important lows right over here. Remember, subscribe to level 4 if you want to get these charts. And then in here in this green zone, looking like it's starting to roll over already. So when we take a look here, we're going to see here that this pattern right there, the candlestick, there's that big hanging man right there. And now still upward momentum, but we're going to look for momentum to break down in here. Support in here around 71. We'll look for Kellogg to pull back there. Not a very volatile stock. Couple points potential on the downside in there. The one that we think is the best one to look at on the weekend here is INTU. This one down only 2% on the week, but this has got some very interesting patterns in here. So take a look at the cyclicality in here. You can see the decline and the sell-off. That's this low right here. The rally and the sell-off, that right there is this low right over here. The rally and the dark cloud cover warning that it's rolling over. That isn't good at all. And this one, the analysts have lowered their target in there. They beat on earnings, and they beat nicely, but look at this giant failure pattern in here, this big engulfing pattern after the report. That is not good, and that says that all the buyers in here today that came in or during this week all got really sucked in on what is a good earnings report, and that stock looks to me like it is going to move down lower. That is into it, and that is everything that we're going to show you for the worst of the week. And we will be right back with our emails and tweets. Emails and tweets. First one, a tweet we'll start out with from Red Gem, who tweets and says, I'm up another 9% thanks to rankings and setups. Well, thank you, Red Gem, for that. Love to hear the great commentary and love that people are doing well based on what we put out. For those of you that aren't familiar with it, our level 3 services, rankings and setups. And what we do is put out 3 different time frames of rankings on the 70 best traded symbols that we have out of our 400, and also send out setups every day. So go to the askSlim site, look at level 3, and you'll see what we're talking about here. So thanks again, great comment. Carl H writes me, an old buddy of mine from the other network, and he says, I'm curious. He says, it looks like there's an island reversal on IBM. Does the number of days matter? He wants to know. In other words, that island is formed, and he thinks it's a reversal bottom, and there's just a lot of days there. He says, what do you think about that? Well, let's take a look at IBM, and we'll take a look at the charts and see what he is talking about. The first thing we'll look at on the left is the weekly chart, and on the right is the daily chart. So on the weekly chart here, note the green zone right over here. That's an area we expected the stock to begin to rally, and you could see our cycle patterns right in here. So we were calling for that bottom and that rally. Let's take a look as we blow up the daily chart and look at this island that you're referring to. Yes, you could see right in here. It's actually an unusual one, is it's a double bottom. Note the gap down over here and the gap up in here, and you made this kind of W that you can see in the middle. This does qualify as an island, really, because of those gaps, and you can see it came up right to our top of our resistance zone right over here, and then has given us today what is a warning. You can see we've circled that there, and that looks like a bearish engulfing pattern right at resistance. So note our shorter term cycles that you can see. This is where the bottom was due, so you see the rally and then the sell-off and then the rally and then the sell-off. That says that we're probably getting into a period out here into middle of March where IBM is likely to pull back. So yeah, we're looking for a pullback in here. 89-day moving average is a good spot for that to happen. That's that line right over there, and we'll look for a pullback into what we call the support zone, and in this case we think a buy zone between 125 and 127.5, back into that area where the island was. Now we'd be buying the stock again over there. So that's a look at IBM. Yes, it's an island. It doesn't matter that it has all of these days right in here. And by the way, an island that has only one day in it is called an abandoned baby. So that's a look at IBM, and thank you, Carl, for a great question. Stephen N. writes me, and he says, thanks for that gold review. We did a special for our members. It was a video on the big picture in gold. You're going to want to see that, so become a member. It says, what are your thoughts on selling a bear vertical call spread in the money on GLD? GLD is the ETF for gold, with an expiration about 4 weeks away. Thinking of taking profits when it's got a 75% profit, that's 75% of the max profit. And it says, would you suggest using GLD for that trade, or maybe one of the other stocks that I had discussed in that video that we did? So interesting question. First of all, this is kind of a complex answer in here. A bear call spread in GLD, that's quite acceptable. It's got good volume in there. Now you say in the money. Now when you do an in the money bear call spread, of course, if both the long and the short are in the money, you have a negative probability of profitability based on the fact that you're paying premium for it. So the higher the implied volatilities, the worse that particular trade is when you get into it. You have a lower probability of profitability just based on option theory. Now, if you do out of the monies, then of course you have a lower potential dollar profit, but your probability of profitability, or POP as we call it, is much higher. So if they're both out of the money, you're probably going to have a something like 60% or more probability of profitability, and if they're both in the money, you're probably going to have closer to a 40% or less. Those are key numbers to look at if you're a strategic option trader. Now you're really talking about a directional trade there. So in this case where you have in the monies at implied volatilities that are fairly high, most of the gold stocks are 50 to 70%. Those really favor doing out of the money trades and maybe doing them in a little bigger size to get more capture of decay. But again, your risks are going to go up when you do that. because if the trade is wrong and they get in the money, well, there's a lot more room for that vertical spread to expand. So kind of a complex answer. You may note that in our rankings and setups, the one gold stock we have in there, the best one to trade is Newmont, NEM. Let's take a look at Newmont, and that has good liquidity, high implied volatilities, and a decent price. It's really one of the best priced ones. You go to a high price one like GOLD, Rand Gold, that one is very thin and very difficult to trade. So the best overall one to trade is Newmont. So let's put up that Newmont chart for you and just take a look at what it looks like. Now, in our little tip-off in our special that we did on the gold stocks, we noted that based on the studies that we shared, they had gotten quite overbought. And we'll take a look here at this Newmont chart. So here's the weekly chart. We actually had a buy and caught a lot of this move as it was breaking out right on over here. This move, this is the weekly chart, and here's that positive area right there on the cyclical patterns. Gets up way high into this upper resistance zone right over there, and for the last few weeks has started to chop a little bit in there. You can see here on the daily chart, you've got kind of this upward rising wedge or flag going on in there. So we're looking, because it's overbought, for a correction, and we could see it getting to the a best case down to this like area around 2390, and a worst case into this support zone right over here about 22.5. These would be buy zones for us again, because we don't think it's over with, and just pull back. So good question. Newmont would be the stock that I would choose to do that trade in because of liquidity and implied volatilities. Now, and doing it with out of the money options. If you wanted to do it with in the money options, then it's the GOLD is going to have slightly less implied volatility, so that might be the direction to go. Great question, really. Next question is from Aguna M. Wants to know about Macy's and Apple. Says, in Macy's, I'm seeing a head and shoulders bottom, so that would be an inverted head and shoulders bottom, on the daily chart. And I feel it's a good buy, she said, on pullbacks. And I'd like to know your view. Also wanted to know my view on Apple, which has got all kinds of things in the news going on right now. So let's take a look at these two stocks for Guna. We'll take a look at that first Macy's first, and that inverted head and shoulders pattern that she's talking about. Here is the weekly chart. We always start on the weekly in Macy's. There you go. And you can see in here that Macy's has rallied. We actually expected it to rally. You can see two cycles right there rising. These two lines point to where we expect the next declining phase to bottom. This is late in this rally and getting up to this level up here of a resistance zone. So we actually expect this resistance zone to hold it and go into a correction into this April, early May period right there. So what you're looking at is an inverted head and shoulders bottom, and that actually is in there. You can see it right over here, but there you could see that resistance zone right over there. You had a gap down right there, and then this inverted head and shoulders that's forming and looking like it's breaking out. So somewhere down the road, we would expect the inverted head and shoulders measurement to play out. That would be from the low of 34 to the neckline here at about 41, we'll call it. So that would be a 7-point move up to about 49 right up over here at some point. But this resistance area has us believing that it's going to struggle in this area and pull back, and then maybe give us a little buy later on. I would say Macy's probably has made a major bottom. I just want to buy in there a little bit later on after we get a pullback and a better entry. Here is Apple. You wanted to know about Apple. We'll look at the weekly chart first. and you can see all of our work in here of cycle analysis, support resistance zones, and all of our annotations and candlestick annotations. Become a Slim Chart member, level 4, and you'll be able to have these right on your TOS platform. So here's what we're looking for. Now, the way this pattern shapes up is that you can see the lows here out in March, April that line up, and you can see our dotted line in here suggests our forecast says there's more to go on the downside in here. That calls for a test of about 92 at some point in Apple. Now, when we look at the daily patterns in here, yes, this is a lot of lines. Somebody wrote me and said, how do you do it with all those lines? Well, we have trained eyes. RV and I, we look at this stuff every day, hours a day, and I've been doing it for 38 years looking at cycle analysis, so it's like breathing to me. And the more you do it, the more you'll get accustomed to it. So here you could see this cycle pattern right in here in the bottom. That looked like we were going to get a rally, and it's trying to get up to this resistance area. Their issue is their court fight regarding the terrorist phone hack, and the government trying to make them create software that would open up that phone because they don't have it. And I'll try to avoid too much political comment there, but I think it's totalitarianism that they have to create something that doesn't exist for the sake of the government breaking their security. Got to really wonder about that. Totalitarianism. I can't even say that word. So there is the resistance there around 99. The support's in here right around 91.2. We think that's the range that Apple's going to trade in here while all of this is going on. I'm a short seller anywhere up over this 98, 99 area where I think it's going to continue to struggle. So that is a look at Apple. Thanks for that one. Some fun questions in here that we're going to look at. I get an email from Jeff. Jeff's subscriber, and I absolutely love this. Jeff is a farmer in Canada, and he said, nice call on gasoline. That's /RB. That was a long setup for us in our rankings and setups, and it moved up sharply. He says, I'm in, and that's a good one. He said, would this be a good hedge for my fuel costs on my farm? So really a valid question, right? I had no idea how much fuel costs were on our grain farm. And he wrote back to me, because I had to ask. I says, well, you got to tell me what your fuel costs are, how much fuel you use. And he came back and he said, well, it's diesel, and the X amount of money is what I use, and wanted to know what the hedge would be. So I had to look up the contract for gasoline, make sure I knew all the contract specs, and then got back to him and said, I'm not sure about the perfect correlation between diesel and regular gasoline. However, this is the number of contracts you would need to hedge your fuel costs for the year at this time. So that was kind of fun to be a participant in doing that, and I know he's made some money on that, even if it's more than the amount of fuel he wanted to hedge. So good one in there. Bob L. writes me and he says, beautiful lesson using light crude chart describing how to use Heiken Ashy candles and impulse bars. That was in a Tools for Text video that we put up in the last week. We have 7 categories of videos that we put up, 3 a week for our viewers. So he wanted to know, can this be used in 1 and 2 minute charts? That answer is yes. Now, what I want to say is that you've got to be careful. 1 and 2 minute charts, those are for very short-term scalpers only. They don't give you exits and entries and directional. It's just really flipping back and forth. I always think the best way to do it is to have some longer term, and if you're a 1 or 2 minute chart, you're probably going to look at 10 or 15 minutes in order to give you trend analysis, momentum analysis. I always believe you have to use 2 time frames to do that. So yes, you can use those setups for scalping. However, I really encourage you to use some longer time frame along with them also. Ray J writes me and he says of his allocations of his portfolio, trades about 30% of it, and 70% of it is longer term investments. He wants to know, does cycle analysis work for that? The answer is yes. And when you go to our rankings and trade setups, the way we have it is we have 3 different time frames. So the longest time frame is based on monthly analysis, and that's really the long term that we do that. We use our cycle analysis on the intermediate term, and that is our weekly charts that we do the work on that you see us put up all the time. So the longer time frame is trend analysis, major trend analysis when it's monthly, and the intermediate time frame, the cycle analysis, helps us discern the quality of the condition, the longer term condition, and also the timing of bounces and pullbacks. And when they turn bullish on the intermediate term, we then start to look for some bullish turns to go on the longer term. So we use the 2 time frames together, and it's a great tool for longer term. So I really encourage you to work on doing that. And one more great one from Mark L. He says, my goodness, it's like you wrote that script for crude oil to follow, and it listened. CL dropped right back into the support we were talking about, and then right back up and actually tested up and near our resistance zone for the week. He says, keep up that great work. He says, you've got me thinking there may really be something to these cycles. I got to tell you, there really is. It's the way to see money flowing in and out in a great visual way. And if you have observational skills, I think you'll learn a lot. Thanks, Mark, for another great email. That is emails and tweets for today, and we'll be right back with our short-term view. All right, before we get into the short-term view, just a quick reminder, our introductory period, which is now just over 6 months long, is coming to an end. So our prices are going to go up in early March. So please do go sign up. Take advantage of our membership. Level 2 is all of our videos, 3 new ones every week. Big library there. Level 3 is our rankings and setups, plus all of our videos. And level 4 is slim charts, rankings and setups, and all of our videos. Take advantage of these lower prices. All right, our short-term view of the week. Last week, a good one. We'll call it 70% on the week, as things really basically went the way we expected them to. The one market that really moved opposite that we expected, and it actually happened a week earlier. It moved the way we expected, but a week earlier for the intermediate term. This shorter term period, it really didn't do what we expected. That is the dollar, the euro market. The euro, we had expected that it would have an up week and then roll over and set up into a bigger correction. But the dollar got really strong on Friday, and that ended that. And of course, the situation with the British pound and the fear that Britain was going to leave the European Union, that caused the European currencies to be extraordinarily weak. They have really bad patterns in there, as we say, and so that one didn't work. Also, we expected a rally in the bond market, and we had a little swing trade in there that we did nicely on it, but the rally didn't get as far as we expected. That still might set up possibly. I'll show you that in a moment, but we did really well. Light crude nailed it, gold really nailed it, stock market nailed it, VIX market nailed it. So really overall, we're going to call this a very good week for the short-term analysis. Let's take a look now as we switch over to the light crude daily chart. We're going to look at only daily charts here as we do our short-term view for the coming week. Take a look here at light crude. So what we had commented on and expected was that we had this bull flag that was forming in here. We thought we were going to move up again. Our anticipated high was up around the 35 level right over there, and that did get very close. We got up to 34.70, and then it started to back off. Now, this isn't necessarily a great pattern when you see that shooting star right over there, and we would expect that that would be an indication that that area of 34.70 to 35 is going to be a tough spot for oil in here. Also, we have a little support area right over here. We'll call that right in the area of Well, let's take a look at that to be sure about the numbers before I say. Right around 32.10, 32.13 to about 32.50. So this is kind of a little support area, that green highlighted area that you could see. After that, the supports get a little bit lower. We expect a choppy week in here. We're going to look for this area of, let's call it 32 or so and 35 or so to be where it spends the week. Now, it could get a little lower than that and still not be any problem. Overall, we're going to expect choppy range bound and kind of this kind of a pattern that you're looking at right in here, and then towards the end of the week into next week rolling over, something like that, but not any bad downside. Now, if it got below this support area right there in the middle around 30.50, that would be a bad sign. I wouldn't want to see that happen. That would be a sign that something a lot weaker in the intermediate term was happening. Right now it still looks good, and we're going to look for this choppy range in here, 32-ish to 35-ish, we'll call it that. Next market we're going to look at is the gold market /GC. We expected the gold market to test those highs, 1255, 1265, and then start to roll over. You could see in here, I came in a little too close. Let's get a little closer look right over here. There you go. That it got up to this level up here, 1254.30 on that rally, so it got really close to our anticipated levels and then started to roll over. Now, you see all of these patterns in here, all of this nesting gold, silver, which had a really bad week, as we said, all coming down in here. That is not a period where you expect rallies to come. You expect declines. We're going to call choppy down this week, part of the following week, getting down to support 1183 right over here. This minor support that you saw hold this week that we had in here, we expect that to get broken. So 1183 is our number. We'll be really bullish after that and use that as a buy zone, but that is what we expect over the next week and a half. Next thing we're going to look at is the euro currency /6E. This is a bad looking chart in here. We call this a left-hand translation, assuming we have it read correctly. This is where there was a rally due, right in here, time frame wise. We got nothing in here, a couple of sideways choppy days, and then they roll over, get down to this 89-day moving average, which you can see was resistance. Now it should be a little bit of support, but we don't expect that to really hold. We think it'll be chopping around in here and continuing down. This whole pattern in here is not very good looking. So we're going to call this a breakdown on the short term. Then we have to go to the weekly supports. That's this green zone in here to find out where we expect it to go down to. 108.32 is the top of this support. It's also an area that it got support in the past. You could see that right in here, 108.30, 108, right in that area. So that's where we expect this decline to go down to. It might happen this week. It might take 2 weeks. But this is not a good pattern, and we've been looking for a period where the dollar has a little more correction and then moves up. We might get a little of that, so we see a little bounce in the euro. But overall, we think we're in a period of stronger dollar, weaker euro, weaker British pound, and correction in gold and silver. And you see that really starting to shape up in here. So we're going to look for a down week. 108.30-ish is the downside target for the next week or two. Next market we're going to look at is the bond market. We're going to look at ZN, the 10-year note, as we always do. Take a closer look in here. So what we expected was that it was going to kind of chop around slightly lower, then get a pop up to around this area right over here, this resistance zone. Well, you could see it tried right in here. It couldn't hold it. It's still in this sloppy, choppy period. We're expecting, I'll show you in a moment, the stock market to move to the downside. And that's probably going to get you a little more of a pop in here, this still in this little rally section. After that, the intermediate pattern is going to take over along with this short-term pattern, and we think we're going to see lower prices. So what are we looking for this coming week? We're going to look for more failing upward chop, really, attempted rallies. Maybe this area back up to the 131.13 to 20 area there, and then start to roll over for a more serious correction. So nothing really good to say in there, just maybe some range-bound attempted rallies that fail, and then after that we'll be looking for some more downside action, some that is more severe. So now let's talk about the stock market. We expected the stock market was going to get through resistance at 1947. It had a shot at resistance at 1978. We thought that was a long shot, and then the market would roll over again and go into some more corrective, choppy period. It looks like that is exactly what happened, and we're going to be looking for the next week to continue into a little corrective period, but nothing all that severe, and then continue this intermediate action of upside correction for just another little bit of time before we get into what will be a very risky period after that. So we think we're in an upward choppy corrective period, and I'm going to show you what that looks like here on the shorter term pattern as we put up the daily chart in the SPX. So here's the SPX chart with our projections and cycles on there, and here you can see that. So what we expected was that we were going to get up through that resistance at 1947 right over here, and then after that fail. We have 10 days of that rally right there. So that's meaningful. These periods go between, let's say, 14 and 16 days on average, and that means that somewhere around the next 4 to 6 days should bring a downward correction in here. That's the period that we think that bond market could do okay, give us some failing rallies so we get a little bit of a flight to safety in there. But then after that, the stock market's likely to have one more rally before getting into its really negative period way out here in March. So what does this look like? We're going to call it this a down week in the stock market. We're going to say that the support in here is this little minor support range. This green zone is 1926 to 1917. It could hold there. You see the 13-day moving on average and the slim ribbon coming in and the upward momentum that came in here. So that's why we don't think there's a lot of downside in this window. This real target for us is around 1903 if it can't hold in here. So first we'll look for this area, 1925 to 1917, then 1903, and then after that up again. So we'll call it 4 to 6 days here, and then of this corrective period, and then down again, then up again, and then the bigger period of down. If it turns out, now this is always possible, that it kind of fools around in here, makes one more new high over here, the timing for this low will be the same. However, the likelihood of us getting to the lower support will be reduced, and then the upper support will be the area that's much more likely. Right now, we're going to call that 1903 number as the most likely for a corrective period in here, and then move back to the upside. That is it for our short-term view. That is it for our show for the week. We always hope that you've done well on what we've brought you. Essentially, we share our analysis with you, our opinions, and hope that then you can adapt whatever your trading style is to what we share in our analysis, and you have an opportunity to raise your probability of success as a trader and as self-directed investor. Make sure that you share this video with everybody that you know that's a trader. We want to get a lot of eyes on what we do. The more that we get people subscribing, the more we can bring on other things and keep growing the askSlim website. You're not a member, go there right now and sign up. That's Market Week for this week. We're going to see you next week, and we're always wishing you great trading. Well, I'm going to sit